You are listening to ChartingWealth.com for Wednesday, the 16th of May, 2016. We always start with IYY on our two-day chart. What do we see going on? Well, we finished up our two-day candle, our latest one, and we have a market that is continuing to move up. Derivative oscillator is losing a little bit of its energy. The MACD, the moving average convergence divergence indicator, and the signal line are still far apart. We continue to have a strong up-moving market. Only one down day on the total market. That was back on the, well, one down two-day candle back on the 9th, Wednesday the 9th of March. And we've continued to see upward movement. We ended this candle, the most recent candle, with continued up movement. Technically, the market was down about 0.5% for the day. If we look at the 4-hour or the intraday chart, we see that it crossed over yesterday, then down some in the morning, back up in the afternoon throughout the course of Tuesday. Before we get into Wednesday, derivative oscillator still in the positive. Actually, we crossed back over going down on the short chart. We're still above the two-day trend line. We'll continue to monitor that. Remember, we are in a market that is still rising. However, what do we have coming up tomorrow? Well, when you hear this podcast, many of you will be listening to it on Wednesday prior to the market opening. Wednesday is a day that the Federal Open Market Committee is going to be meeting. So the Federal Reserve, pay close attention. The market may soar depending on what they say. If they give bad news, of course, the market will crash. It's always a dangerous day to be in the market. That is where we are on the total market. Now, let's go back to our two-day chart. Take a look at SPY, the S&P 500. It was down 0.17%, so a little less than 0.2% for the day. We still have a strong, nice, well-connected trend line going up. Ended on an up candle for the 15th. And when we look intraday, what do we see going on? Well, the market crossed over during the course of Monday, then down over the course of Tuesday, really slipping sideways, still above the two-day trend line. Market is still a surging up market, so we'll continue to watch. Hopefully good news from the Fed. Maybe that's what the large chart's portending to us. Still above the two-day trend line. Whenever we go below that two-day trend line, we get particularly worried if we are in a virtual trade at that time. So continue to monitor. Those of you who got in yesterday on that crossover going up, again, continue to trust in your big chart. You don't have to. You can always get in and get out, but we will continue to monitor and see how things continue to move forward for those virtual trades. And again, I always make this caveat. We are not a stock calling service. We are an education firm. We are not giving any advice regarding real trades. All of our trades are virtual trades for you to practice. Once you get good, you make your own decisions. Okay, lastly, let's go back out to our two-day chart and take a look at the Qs. That is QQQ. It was down 0.05% for the day. So 0.5% down. And we have a two-day trend line that continues to move up for us, although not as strongly as the total market, and I'm trying to make an adjustment on that right now to make sure. Oh yes, we still have a good two-day trend connecting three candles going up. We're in the positive on the derivative oscillator and of course on our MACD above the signal line. If we revert to our two-day chart, from the two-day to the 4-hour, what do we see? The top of the Bollinger Band. We have crossed over, as we talked about yesterday on Monday when we did this recording for Tuesday. Well, on Tuesday, we're talking about what happened on Monday for our Wednesday recording. We crossed over going up on Monday, the 14th, and we're continuing to move up, although we are at the top of the Bollinger Band above the two-day trend line. Like I said, technically down about 0.5% for the day, so we're still in positive territory. On the Qs, that is the NASDAQ 100 for both our short chart and our long chart. Now, lastly, let's take a look at what gold is up to. We're going to take a look on gold at the 2-day trend line. It did cross over going down. Derivative oscillator heated up over the course of the last 2 days on that candle. And if we take a look at our 4-hour chart, what do we see going on? 4-hour chart still in the negative. That trend line has been broken, of course, and we have a crossover going down on both the big chart and the small chart. Hopefully none of you are long on any trades in gold. Hopefully you took your money and got out somewhere around the 11th, if not before, on the 4th of March. That is where we are as the end of the day. Again, remember what we gave you at the beginning of the week regarding what's going on news-wise this week, and that is the Federal Open Market Committee. If you are in a virtual trade in the markets, pay close attention to what goes on. Be ready, willing, and able to get out of your position if bad news comes out from the Fed. If good news comes out, perhaps, and again, sometimes it's counterintuitive. Sometimes the market's already built in the good news, and the minute it comes out, the market goes down. But continue to watch your charts. Pay attention to what they tell you. That's where we are at the close of the day on Tuesday as we go into Wednesday the 16th. Thank you so much for listening to us. We wish you the best. You have questions, concerns, problems, issues, let us hear from you at chartingwealth.com. Be sure to sign up for our daily podcast. You'll receive a newsletter with the podcast included. You'll also receive a link on how to read a stock chart video. You will love that if you don't already have a lot of knowledge in the area. Even if you do, please listen to it. Additionally, you can watch it. It's actually a video podcast. In addition to that, we'll also send you our layout that we use at Charting Wealth. It's from freestockcharts.com and TC2000. Thanks so much for joining us from chartingwealth.com.